Now, a lot of people, with tax season having just came around and about to end, got hit with a very unpleasant surprise, and that is if they bought an NFT or multiple NFTs and then sold those NFTs, that is profit, that is personal profit on a side venture. And with that profit, you know the government has to have their fair share. Right? So a lot of people got hit with that unpleasant surprise of now they owe a lot of money.
Well, that's fantastic. A really smart decision, young man. We can put that check in a money market mutual fund. Then we'll reinvest the earnings into foreign currency accounts with compounding interest, and it's gone.
Now, a lot of these people, what they did is they cashed out their NFTs and they spent that money. They spent it very frivolously, meaning they didn't have that excess of money when it came time to pay said fair share. Well, I am not a CPA, nor am I a financial advisor. I do not do any finances professionally, so you will have to check maybe a quick Google search or a call to a CPA in your area, depending on the country, state, and sometimes even county, about how to go about handling your taxes. But something very interesting is happening. Individuals are going out and registering an LLC company for their NFTs. Now, you guys may be wondering, we're not selling any physical product, we are not offering any services. How on earth does an LLC incorporate, or a standalone company incorporate into digital assets like NFTs and cryptocurrency? Well, the main way we are seeing this happen is the fact that once you register an LLC, you have the option to write-offs. Now, these write-offs can be very extensive, very helpful, and save you a crap ton of money. Real quick, if this is the kind of content you like, we're putting out free content all the time, and I'd just like to invite you to subscribe to the channel and be a part of the Hustle family. So when it comes to write-offs and LLCs and NFTs, why are people doing this? And how hard is it, how expensive is it to get started? Well, having an LLC in my state for a little over 2 years now, I can tell you it's extremely simple. It cost us about $40 all in, said and done, to register an LLC, and it took about 3 days to get all the paperwork processed. Meaning if you're preparing for next tax season of 2023, which of course you should always be thinking about, this is something that may heavily apply to you, as in a few days of work, a little bit of paperwork, and a minute amount of money can have you set up for these write-offs come next year. Again, I'm not a CPA, and your laws and regulations will vary based on the country, state, and county you reside in. So double check anything before you actually go and pursue this avenue, or this route rather. So what can you write off with an LLC for NFTs? Well, right off the base, if you are planning on flipping these NFTs, the cost that you pay for the NFT is an incurred expense. Now, you can write off the expense of the NFT, but of course also make sure you input when you sell it. If you do not sell the NFT and you are holding it for a long term, then an LLC might not be right for you, as that would just fall under what is hopefully not soon to be a capital gains tax on those NFTs, meaning a capital gain. If you are holding capital such as an NFT and that NFT increases in value but you do not sell it, you may have to pay taxes on the increase of value. Something that is very hard to do, as if you don't sell your NFT, you may not have the extra capital to cover that. So this is mainly for people that are buying, selling, day trading, or swing trading NFTs. That incurred expense you get when you purchase an NFT minus whatever you sell that NFT for is going to be your profit. Now, that profit is going to be taxed based on where you live. However, the percentage that is taxed can be taken down based on a few things. That is, what you spent for that NFT, and also the gas fee or transaction fee you paid for that NFT as well. Meaning, if I go and purchase an NFT under my LLC, I take not only the incurred expense of that product itself, but I also now have an incurred fee, which is that transaction fee. Now, these transaction fees can be written off because they are an expense that will not figure into the profit once you actually sell your goods, or in this case, your NFT. One of the main ways I've been seeing people go about this is with ENS domains. They have been starting ENS domain flipping services under an LLC registered wherever they live. When they do this, any ENS domain that they buy comes in and they write off the expense. Now, when they sell it, of course, they write the profit down, and deducting the two, you have your total gross or net profit after all is said and done, plus you're writing off the transaction fee. On top of that, in your business, anything you do to further your knowledge of the business or around the business itself is also a write-off, which you know it's coming. You've been watching YouTube for a while. Of course, many different channels out there are advertising. Now, in these advertisements, you see a lot of courses. Granted, if you wanted to be an online seller or drop shipping, something you've heard, there are many courses out there that'll teach you how to do so. If you purchase a drop shipping course and you are a drop shipper under an LLC, the total cost of that course is a write-off. It is educational expenses for your business, therefore you can write that off at the end of the year. The same thing goes for NFTs. If it falls under the canopy of an LLC, any money you spend learning about your trade or your craft is also a write-off. Now, there are many other things that you could take into account. If your sole LLC is NFTs, you are using your cell phone, you are using internet. If you purchase a computer or laptop or monitors to do sole trading on, that is an expense and you can probably write that off. If you have a dedicated office space, for YouTube, for example, this studio space that I have right here takes up about 100 square feet, if not a little bit more. It is small, but it is a write-off. I can write off that square footage of the house as an office space that is used solely for business purposes, not for anything else. Granted, we also have product for our Amazon business that is stored here and elsewhere in warehouses. Those are also write-offs as well. If you go to meet with anyone in person, those miles you drive and possibly even the food that you eat during that business meeting is, yes, you guessed it, let's cue, it is a tax deductible expense. So feel free to ask any questions that you would have down below. I'm happy to answer them to the best of my knowledge, as long as you remember that I can only give you information, not advice, based on what I have been through and what I have done. These may vary, as what goes in my state may be completely different from yours. Granted, the base tax percentage of our state is different than any other state in the country, so make sure you double check with a professional when pursuing any of these options. However, some of these options will be applicable to you if you follow that route, and it will save you a little bit of money come time when the man tries to dip his hands into your pocket and take that hard, if you're using something like Trade Sniper, maybe not so hard earned money. On that note, things like Trade Sniper, things like NFT Sniper, these are expenses you will incur as well, and they are used solely for flipping NFTs. These are expenses, and you can write those off most likely as well. As always, stay profitable. Don't let the FOMO monster bite you in the ass. It's gonna try daily. And as always, keep hustling.